Hi, good day to all. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices for the week of 25th of April to 29th of April 2022. I'll be covering, as usual, the latest trend bias for this week, and as well as the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40. So before we start, let's take a look at the disclaimer slides first. All right, so let's take a trip around the globe and have a look at the momentum readings of the major global stock indices across the globe. So what we could see over here is another week of dismay, or what I call it, a very weak performance on the US benchmark stock indices, where all the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, as well as the small cap Russell 2000, all ended in the red. And in fact, last week was their third consecutive weekly decline, and right now they're just a couple of whisker away from their mid-February lows. That was actually seen during the onset or the start of this Russia and Ukraine invasion, and as well as the start of this steep uprise in U.S. Treasury yield. 10-year yield, which actually represents a higher cost of global funding going forward. But most interesting over here is that the worst hit was actually the Nasdaq 100, which is related to tech and growth, and as well as the small caps Russell 2000. Both of them actually underperform within the major US stock indices. So that's a kind of being pardon, so that's actually being represented by their higher sensitivity towards a rising long-dated US Treasury yield. So all in all, what we see right now over here is the bearish momentum has starts to regain itself on the China-related stock market. Was hit across the globe. If you look at the performance across the globe, the Hang Seng Index and the Hang Seng Tech Index, especially, were the one that are the worst underperformer last week, down by negative 1.10%, as well as the Hang Seng Tech Index, which represents a basket of China big tech stock, down negative 7.38%. And one of the reasons we did highlight earlier on is actually since the start of this year in our Q2 global outlook, one of the major emerging themes to watch actually is a rate of depreciation on the dollar yen, which could actually impact the movement of the Chinese yuan, and we are actually expecting the Chinese yuan to actually weaken as well, which actually it did take shape last week, where actually the CNH, the offshore yuan, actually weakened the most since 2 years. All right, so that's actually one of the primary factors that actually drive this weakness is seen in the China-related stock market, and most importantly, this weakening of this Chinese yuan is actually one of the final jigsaw piece to actually complete this potential start of a long-term circular downtrend of this global equity. That means, i.e., we are talking over here is that there's an increased chance that the SPX right now will start to retrace this 13-year of bullish, long-term bullish run since the low of March 2009. That means we are looking here for a potential decline of at least 40%. So to find out more, right, of all this, what we call it, mechanism of how the interrelation between different asset classes, how they impact one another, you can actually follow my social media account, which is my Twitter, where actually I tweet almost every day on what's going on in the market, so that you guys are able to have a better understanding to actually plan your trading journey, or from a short term to a long term perspective. So later, after this outlook, I will share with you all how to actually follow me on Twitter. And overall, the Nikkei 225 and the German DAX index is rather relatively unchanged. But however, if later I share with you all the technical configuration, they're actually bearish as well for this coming week. All right, so now let's take a look immediately. Go to the our platform. Okay, so before we go into our platform, right, on the technical features, let's give a quick rundown on the 11 major S&P sector performance for last week. So all you could see over here is pretty bad as well. Only two of 11 in the green, showing positive gain, which is the real estate and the consumer staples. Both of them are considered as a defensive sector. But what's amazed me over here is that previously the healthcare, which is a defensive sector, the materials as well as the energy, all of them actually rank now at the bottom of this table. So one of the reasons, especially related to energy, is due to this fear of a corrective decline, a multi-corrective decline in oil prices due to this extended lockdown that is being seen in key we call it States of China, the commerce hub. Let's say Shanghai is now extending its close of the third week of lockdown, and also over the weekend, there's actually reporting significant increase of infection cluster in the China capital, which is Beijing. So all in all, we now start to see a kind of a significant flare up of COVID-19 infection cases in China. And do not forget over here is that China still maintain their stringent COVID zero policy. That means we're talking about extending what we call it movement measures to restrict we call it movement between the the various states, which could hinder what I call it economic activities. So that being said, China is also one of the major oil importers in the world. So given this restriction of economic activities, there will be lesser demand for oil as per se. So that's create that kind of what I call negative demand shock in the oil prices right now, where actually I share my social media account as well, Twitter, or what are the key levels to watch out for. Potentially it could actually kickstart that multi-week decline on WTI crude futures. Okay, so now very quickly, let's jump into the technical trend for this week on the major stock indices that I share with you all. So as usual, for those who actually follow me for a long period of time ago, for a period of time, before we go into straight into the strategy chart. So for weekly, we are looking at the 4 hour chart, right? 4 hour chart, not hourly, not 15 minutes, because that's too short term. We're talking about weekly, for at least we're talking about a period of between 1 to 3 weeks. So before I jump into the weekly chart, I would tend to actually look at the higher time, one higher time frame, which is the daily chart. So this daily chart, as you can see over here, give us a clearer, bigger picture of what's going on in the surface of the S&P 500. So we're talking about the technical picture or the technical analysis. So what we could see over here is that last week it actually failed to actually surpass its 200-day moving average, which is considered as a key long-term psychologically moving average, where the market is watching. And most important, then thereafter, it did that significant push down for the last 2 days, Thursday and Friday, right at the 200-day moving average, which is this graphical conference with this graphical resistance. The former swing low area broke tested becomes a pullback support, which is at 45.20. And most importantly over here, what's 45.20? If you confluence it, so there are actually three elements that is confluence at 45.20. Former swing low turns in broken down, turns into a support level, turns into a resistance. 200-day moving average acting as a resistance, as well as if you draw from the last high, the last high of 29 of or the last the swing high of this current down move, 29 of March, all the way down to the current intraday low right now in Asia session, which is close to the golden ratio of 61.8%. Okay, so definitely that means this is a key resistance to watch for this week. That means if you are talking about if the bears were to have further legs to actually push down much lower, this is the resistance that it must not break above. All right. So what does that mean? So if you look at the momentum has been supporting a further potential down move as well. As you look at the RSI oscillator has broken below this ascending support, and do not forget this ascending support was drawn from the this oversold region or the 24th of Jan, and also correspond to that former bullish divergence. Okay, so lower low on price action, higher low on RSI, but however, this bullish divergence has been invalidated. We call it support broken, and price action now has started to turn. We call it downside momentum has started to revive from a medium term perspective. And what is the intermediate support to watch? That will be 4140 slash 4060. So what's 4140? 4140 is in fact the swing low of February and March, which is a pretty much key important level that give rise to this previous swift rebound from here. And also at this former expanding wedge resistance that was broken above since over here. All right, this former wedge resistance that was broken above on Jan 2021, retested twice over here. Right now, it may start to retest again at 4060. So this is what I call key significant near-term support over here. And if it starts to have a clear break below 4060, a daily close below it, we could take us down much lower to it, 3840 and 3720. So that level, if I were to look at, is a graphical a support zone here. And as well, if we draw the Fibo retracement from the low of March 2022, so which is this is the start of this current major uptrend. So we're talking about at least up more than a year of uptrend. It's 2 years. That's why I consider as major. towards the current all-time high here. All right, so that's actually give us close to 38.2% retracement as well. Okay, which is we quite right now we're trying to do is that we're trying to pinpoint levels, graphical support that confluence with other elements like Fibo retracement. All right. So definitely we're now seeing further downside pressure as indicated by the elements that I highlighted you on the daily chart. So how about on the weekly chart, which is my strategy chart? So do not forget, last week we have a key support level, the key Milton pivotal support level to watch, which is at this 4300 level. So very clearly, 4300 level has been broken down. So initially we keep that 4300 level to play that last push up, potential last push up of hope and irrationality before we start to see the this multi long-term circular, long-term that means talk about multi-year, potentially multi-year, long-term circular bearish trend start to kickstart. So apparently what you see right now, right, potentially we could actually be on the storm of this long-term circular downtrend that may have already been taken shape at this point in time. So what we could see over here is that the 13-year of uptrend based on Elliott wave, the big wave 5, may have ended at the current all-time high at 48.18. So that is the potential end of that 13-year uptrend since the low of March 2009, which is the famous 666 low. All right. So what we could see now is could be the start of this potential long-term circular multi-year downtrend that is taking shape on the SPX 500. So what we could see now in the shorter term, so this is a 4-hour chart, right? So the 4-hour chart, we now start to see the 4-hour RSI now coming very close to an extreme oversold level, which is at 21% level. Okay, taking from the low of this 20th of September. Okay, since the 20th of September 2021. So every time it hit this level over here, if you could eyeball it, price action managed to at least shape. Oops. Okay, at least shape a rebound, 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 rebound as well. Right here is coming very close to this level. So and previously there's rebound as well on the 6th of April and the 12th of April. So what it means over here is that potentially we may start to see another bounce back again towards this 4330, which was last close to last week's key middle pivotal support level, now turns into a resistance, 4330 slash 4360, before another potential down leg to actually allow it to actually take shape to retest that February at March a low area at 4140 slash 4110 level. So maximum rebounds could actually come close to 4520. So I don't want to type the key Billiton pivotal support so close at 4330 slash 4360. Do not forget 4520 is a key level because that's the level where it actually kind of tests that 200-day moving average and shape that bearish reaction that was seen on last Thursday and Friday. So that is indeed a significant resistance level for in order to maintain this medium term or this multi-week bearish trend for this week. Okay, so 4520 will be my resistance level to maintain the bearish bias in any bounces. So however, we start to see a 4-hour close above 4520, then we will state that more or less we could actually revive this we call it last hope of irrationality movement to retest the former swing high area of 30th of March at 4640. Okay, now moving on next to the Nasdaq 100. So the Nasdaq 100, as seen on the daily chart, we could see very clearly the 200-day moving average is a very key resistance in the medium term. Tested one time, two time, three time, four time. Okay, in a row that refused to break above, which correspond to the lower limit of this key medium term resistance, which is at 4520 slash 1528 slash 15540, which is this former swing low area of this range that turns into a pullback support level. So definitely this is a key level for in order for the bulls, in order for the bears to actually preventing it from further upside to shape that last hope, okay, of irrationality. That means the residual push up. So all in all, similar as well. The momentum remains weak on the medium term, where the RSI break below this ascending trend line support level. last Friday. So all in all, right, we could see this movement to actually retest this February March low, which is at 12,940, and right below it will be at 12,410 slash 12,210, which is this bunch of key graphical levels, which is former swing high resistance, turns into a pullback support. And if I draw the Fibo retracement from this current major, we call it the major uptrend low of 23rd of March towards the current all-time high, printed in November 2020, 22nd November 2011. It's correspond very closely at the 38, this 30.2%, and over here is very closely this so graphically 1294, and below it we have this zone over here, which is at 12,410 slash 12,220 level. Okay, then now let's quickly go through the 4-hour chart. So bear in mind over here is that this level here is so key as well. Okay, close to this 14,330 zone. Okay, 14,330 zone. So if we could draw the Fibo retracement taking into account of last week, the current push down is at 50% retracement. All right. So now on the 4-hour chart, right, it's very similar behavior that we see on the SPX 500. The RSI now is coming very close to an extreme overbought level, close to at this 21% level. Okay, where previously it managed to actually see some bounces on the index itself. So what we could mean over here is that last week we have a key medium-term pivotal support at 13,800, which has really been clearly taken down, 13,690, pardon me, 13,690, 13,800. So very clearly been taken down from here. So now turns into a pullback resistance. So we may start to see a minor, kind of a corrective bounce first, before this down leg resumes to actually test that swing low area of 50, that swing low area of 15th of March at 12,940, then at 12,760. So what's 12,760? If I draw the Fibo extension level, taking into account of the start of this current down move, towards the last week failure move to break above 4315 level, this range resistance here, it's closed, it's one timer, it's one time Fibo projection over here, which is in. So all in all, right, what it means over here is that as long as this 4315 didn't surpass, there's no 4-hour close below it, any bounces will consider as a bad move to actually potentially see a start of another new down leg, potentially towards 12,940, then further followed by 12,760. But however, if you have a 4-hour close above 14,315, then we will start to see the revival of this potential last move of hope and irrationality to retest that 15,280 slash 15,540 range resistance again. Now, moving on to the Hong Kong 40 or Hong Kong 50 index, pardon me. So for the Hong Kong 50 index, last week we have a bearish bias at 20,220 slash 19,870. So price action already been made on last Friday. So what we could see over here is overall it's still bearish. So what we could do over here is that potentially in the short term we may see a bit of bounce back towards the 2960 level, which is this former minus kind of a support level, broken turns into a pullback resistance. So this level over here, then definitely the bounces cannot surpass this tighten key medium term pivotal resistance that I tightened lower for this week at 21,600, which is so close to this pullback resistance of this former expanding wedge uh, configuration that has been broken down on the 11th of April, so about 2 weeks ago. Okay, so now what we could see over here, a further down move back towards this graphically, this will be the lower boundary of this ongoing expanding wedge configuration since this high of 18th of February. Okay, 18th of February from here. So previously kind of a reintegrate above it. So this was actually being caused by that verbal intervention from China State Council to actually smooth that previous fear of decline. That actually hope to actually encouraging more expansionary fiscal and monetary policy to actually maintain economic growth. So, but however, due to this current situation that we see right now, especially on the weakening of the yuan, it kind of override this this kind of a verbal in, intention that was actually being we call it stated previously by the China top policy makers to actually calm the nerves of the markets. So, however, price action wise is bearish. It's still it's bearish for now. So if you look at objectively on the price, what you can see the next support level to watch will be the lower boundary of this expanding wedge, which I highlighted earlier, but taking on from the high of February 2021. And also, if I were to draw the Fibo retracement taking from the last push up for 15th of Feb March low, 15th of March 2020 low to 4th of April 2022 high is at 76.4% retracement. And if I do the Fibo extension from this ongoing decline, okay, it's close to 1.618%. Okay, 1.618 Fibo extension. Okay, so all in all, this level here is pretty significant as a kind of an inflection level for the further potential down move to actually take place. In any bounces towards before that, there will be a bounce first towards 1960, maximum 21,600. But however, if we start to see a 4-hour close above 21,600, then we could actually then I say that this downward has been invalidated and price action could actually shape this further extension of another corrective rebound towards this 23,000 levels slash 23,380 zone, which is the if we go at long term, which is the weekly chart is actually the former major or ascending trend line from the great financial crisis low broken now turns into a pullback resistance from here from a longer term chart perspective. So that level is pretty key as well. Now, moving on next to the Japan 225. Okay, the Nikkei 225. So if you recall the Nikkei 225, right, it's kind of stuck to play within that range of 28,030 and towards 25,070 and the March low of 24,480 slash 24,180 level, which is this level here, the former range top of December 2019 and February 2020. Okay, so price action now kind of a pretty much bearish, looking to at least retest 25,700 first in the first step on the daily chart after almost a bearish shooting star that was actually kind of being rejected close close to this descending resistance that has kept previous recovery since 14th of Sep 2021 high from here. Okay, let me. All right. So all in all, right, what we could still see a bit of bearish movement down towards 2570, then maximum towards this 24,480, 24,480 slash 24,180 for this week. Okay, so just to say that to play within this range and this range in first step, a break below may take us down lower over here. So, but most importantly, I want to highlight this bearish reaction, which is this bearish shooting star that actually being formed right under this key descending range resistance at 20,030 level, and also this pullback support turns into a resistance as well. Okay, so now if we to go into the strategy chart for this week, the 4-hour strategy chart, so what we could see over here is the RSI now is coming very close to the oversold region, so we may see a bit of bounce going forward, a minor bounce towards this 27,230, which is this bearish wedge that's been broken on last Thursday, so or Friday I would say. So yeah, last Friday. So turns into a pullback resistance. So as long as this key descending range resistance is not being surpassed, that I highlighted earlier from 14th of September 2021, which is now resisted at 28,030. So we still maintain that bearish bias in first step to look for it to come down towards potentially towards 25,700, which is this former swing high area, turns into a support level. And if I draw the Fibo retracement, it's actually taking from the low of March towards the last high. It's close to 76.4%. And if you draw the Fibo extension, from the high towards the low of 12th of March, project it to the last push on last Thursday before the break below this bearish flag configuration is close to 76.4 as well. Okay, so all in all, what we could see over here is a movement down towards 25,700 in the first step. But however, if we start to see a bullish breakout above to 8,030 level, that means we have a 4-hour close above to 8,030, then we could see another leg of this extension of this previous rebound from 8th of March towards the 29th of March high, another extension of this rebound to actually test the next resistance at 29,390, which is the graphical swing high area of 5th of Jan 2022. Okay, and now moving on next to the German 40 or the German 40 index. So the German 40 index, what we could see now is last week we were neutral because price action still stuck within a range, but we could start to see the last 3 days of price action is pretty bearish, especially with the emergence of this shooting star, bearish shooting star, right below this 50-30 range, former range support turns into a pullback resistance level. And also now the RSI is actually now turning back below the 50% neutrality range, neutrality level, indicating to us some signs of a revival of medium-term downside momentum. Okay, so now moving on to the 4-hour chart, which is the strategy chart that I like to share with you all, is that the German 40 now we flip to a bearish bias because now it's actually breaking below the 13,990 lower neutrality level that we have last week. But definitely the cash market is not open yet at this point in time. So we got to actually be more. There's also a risk of a potential bounce first. Okay, before this potential down leg resume towards 13,600 slash 13,340, then followed by 13,020 level. So this level, graphical support level, you could see over here pretty clear. This zone here as well. And if we could draw the Fibo retracement, taking from the low of 7th of March towards the high of 30th of March, you see 61.8% and 76.4%. And if you do the Fibo extension, taken from the high of 29th of March towards the low of 12th April, project it from the high of 21st of March, means last Wednesday high before it collapsed. This is close to 1.618%. Okay, so a couple of interesting confluence at this key medium-term support zone here, where it considers an inflection level, where prices tends to be being pulled like a magnet towards this level. So all in all, as long as 15,030 key medium-term pivotal resistance holds, we're just expecting a further potential downside towards this support zone at 13,600 slash 13,340, followed by 13,020. But however, if we start to see a 4-hour close above 15,030 level, then we could see another leg of corrective rebound to actually test this congestion zone here at 15,500 slash 15,700. If I draw the Fibo retracement from the top towards the bottom, okay, so that comes with close 61.8% here, so that's slightly below 76.4% level. So but very clearly the graphical area here is pretty much significant. We could see at 15,500 slash 15,700 level. Okay, so with that, all in all, what we could see now is based on the price action that we see on last Friday, as well as inter-market correlation, taking into account of the levels of the weakness of the Chinese yuan after key resistance level has been broken out, which I share in my social media account Twitter. We now maybe start to see the eye. We are now on the onset of this potential long-term circular bearish trend that is likely to have kickstarted for the global stock indices. So unfortunately, this is how the price action behave based on intermarket correlation, the best that I could see right now based on the analysis that I could see on that. But so we got to take steam one step at a time, and unfortunately, that is the end of this 13 year of potential uptrend for global stock indices. So now, before we go over here, is that let me share with you all the this will be my social media account where I actually share with you all, yeah, especially this is the emerging team that I'm referring to, the weakening yuan, which is Chinese, the weakening uh, of the Chinese yuan, which is directly caused by the rapid pace of the Japanese yuan depreciation. You can actually read more from here. Okay, so give me a follow so that you guys are able to have a better understanding. Hopefully, by reading my tweets on a daily basis, you guys are able to have the better understanding how intermarket analysis works together and how to actually plan your week ahead from or your trading plan from a short term to a longer term perspective. So do give me a follow at Kelvin SC Wong. Okay, just open Twitter account, it's free at Kelvin SC Wong. All right, so have a great trading week ahead, and I see you again in my next video.